Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this Monday morning at around about 11:15, there has been a little bit of profit booking that is visible on the markets, marginally nothing large as I speak to you. And this is post the fantastic recovery that we saw last week. To give you certain levels on the index as well as Nifty Bank and Rupee Dollar Crude Oil. Well, the Sensex is down about 140 odd points. 58,850 is the level on Sensex. Nifty is down 30 odd points. 17,330 is the level on Nifty Spot. Bank Nifty absolutely flat, plus 4 points at 40,610. These are the levels on the index and Nifty Bank, and the equation as far as all the levels on the currency, rupee, dollar, and crude oil. Well, currency, rupee is weak against the dollar. Weakness is at about 0.23 paise, and the level is 82.40 rupees to dollar. And on the crude oil side, now this is where the crude shock has come through in form of OPEC plus countries deciding to bring down their production or cut their productions from 1st of May onwards, that is next month. And there has been a sizable cut, including Saudi Arabia, UAE, and other oil producing nations, that is OPEC plus. And this has sent the crude oil prices up almost about $4, both on the Brent and NYMEX. To give you levels on the Brent and NYMEX, well, Brent is at about $84.02 to a barrel, and NYMEX is at about $79.66 to a barrel. And the likely commentary that we are hearing on the street as far as crude oil prices are concerned, that this cut could possibly push the crude oil prices to a much more higher level. How much, to what extent, when, I think only time will tell, and it will all depend upon demand and supply. So, especially for all those countries who are dependent on imports of crude oil, I think it's time to possibly tighten the seat belts, because we are in for some volatile ride on the upside as far as crude oil prices are concerned. On the markets coming back, well, after seeing a fantastic recovery last week, a little bit of profit booking, not surprising. This week, friends, we have an absolute truncated week. Tomorrow, that is 4th Tuesday, we have an holiday on account of Mahavir Jayanti. And on Friday, that is 7th of April, we have a holiday on account of Good Friday. So we have 2 days less this week. In effect, we'll be trading only for 3 days: today, Wednesday, and Thursday. Choppiness, volatility could be the order of the day as we go into the week, depending upon the news flows that come into from the global markets and what we hear from the local markets. Other than crude oil, some other triggers that could possibly impact the market is, of course, from 12th onwards, next week, 12th April, we will have a curtain raiser for the fourth and final quarter, last financial year. Starting with, of course, TCS, as always, will announce its numbers first for the first quarter, and then we'll have the rest of the companies following. There could be some amount of direction that the markets can take depending upon how the fourth quarter numbers are. It can be sector specific, it can be stock specific. One will have to just wait and watch. But given the kind of expectation on Q4 earnings, well, let us expect a color or a shade better than what we've seen in the last quarter, that is third quarter. Of course, commentary from the management for the new financial year as to where they are seeing their business going will play a very significant role to possibly gauge the growth story as far as corporate India is concerned in terms of earning visibility. COVID numbers are going up, as I spoke to you last week, but there is nothing alarming. Possibly, if the situation is under control, then we may not have any unpleasant surprise from the new variant of COVID-19. So, as always, friends, we give you investment ideas. There are two of them. One is from a large cap cement name, and the other one is from mid cap public sector bank. The first one is ACC. We've seen tremendous amount of price correction on fallback of news flow on one particular group company. and that has led to a very attractive levels in terms of long-term investment, where the stock prices of ACC are. Keeping in mind the spending that the government will do in terms of infrastructure creation, keeping in mind the improvement in real estate sector, and along with that, private capex coming through, our sense is that consumption of cement is likely to go up, and that will throw in positivity as far as the sales number of month-on-month cement bags are concerned. Input cost overhang is also a thing of the past. And if you have a long-term time horizon, then not really listening into the noise that is around in terms of news flow. Our sense is that being one of the largest cement manufacturer in India with a large market share, this correction is a great opportunity to look at ACC from a long-term point of view. Mind you, this is a fundamental long-term idea, and a prudent approach would be to stagger your investment and start getting invested in ACC. The second one is a public sector name, mid-cap, Canara Bank. Friends, great set of numbers for the third quarter. And if you just go by the verbatim given by some of the management of leading banks, both public as well as private, and they are expecting the deposits to go up. They are expecting advances uh, to go up, and that will lead to margins coming in much more stronger. The latest change in terms of the debt fund that was announced in the finance bill